In this video, I'm going to take you through a quick morning hour test. So it's 7:14, 15 minutes really after the time to do the test. But now we have the answers and we can go ahead and settle in. So for the S&P first, if we start by drawing our line at that 7 a.m. hour, we don't breach either side's aggressive volatility box line, so you're okay to continue to use the aggressive one. Now, if we go to the NASDAQ, same thing, so okay to use there. However, if you go to the Dow, you'll notice something different. We did breach our aggressive volatility box line. So now our trading assistant comes out and tells us, hey, do you hit 2152 first, which it's closer to right down here. So we know that we didn't hit 2152, not even in the closest. Or do you hit 21838 first, which is outside of the box first? The high of this candle was 21842, which is above 21838. And so that becomes your very clear sign on the Dow to switch on over to our conservative models. So right off the bat, you already know the S&P is less volatile, the Nasdaq is less volatile, but the Dow is facing more volatility than its peers. Now, if we come on over to our Russell, we'll repeat the same thing, nothing on the Russell, go on to crude oil, and same thing on crude, right? We didn't breach either side's lines. In fact, we didn't even come close to breaching either side's lines. Then we'll move on to the bonds. Similar story here on the bonds, and then gold. Now in gold's case, we did breach our lines, right? So we breached our line right here, and our box came up and told us, do we hit 1650 first, which we did, in which case, okay, you have the permission to continue to use the aggressive volatility box. Now the second entry is the one that didn't pan out, but it's that first entry that gave you the follow through, which lets you know that, hey, you're hitting at least your T1s, right? That's the logic behind that rule. And so far, we seem to be respecting our aggressive box. So that's what we're currently on gold, but recognizing you're not getting follow through to T2, or you at least can't take that for granted. So if you are looking to be a bit more aggressive in protecting profits, well, this is your hint to go ahead and do so. And then finally, let's move on to natural gas. And in the case of NG, same thing. And then copper, I believe, is the last one that we have, which same sort of scenario, right? So just like this, we already know that the Dow, along with gold, are more volatile markets. You're more likely to get an entry there, but we have switched on over to our conservative box, at least on the Dow. So if you do get an entry on the conservative, well, that's where the probabilities start to stack in your favor. Hopefully this video demonstrates just how easy these trading labels are going to make it for new volatility box traders to pick up the system and really just start to have objective measures in which you're looking for a process-driven approach to keep trading like a pro. All right, take care everyone, and good luck trading the rest of this day.